we are in the teeth of the best part of the entire cycle. The price is going to go up regardless. We threw all the FUD at it over the summer. That was the correct 50% correction. Basically, the market's been trading sideways in a volatile range since March for Bitcoin and May for the rest of the market, Ethereum. And this is the point. I mean, if you look at all of the post-halving cycles, this quarter is where all the gains are made. I mean, I cannot stress that enough, that this is the time. It's the, I'm keep adding to my risk. I mean, every penny that I get in just goes into this. I think it's different. And I've spent a lot of time thinking about this. I think it's going to extend further because we've got new players into the market and they operate differently. So firstly, we've got the ETF. I think we'll get an Ethereum ETF as well. So that's continued news flow. We've also got the ETH 2.0 and the amount of staking that's going on and what that does. That's going to probably lead to a buy the rumor, sell the fact. And I think it's going to be very powerful because, if you have the ETF and this ridiculous shortage of ETH that's going on, you've got something pretty powerful. But the big factor that people need to think about is how institutions asset allocate. It's quarterly and it's annual. So we will see this bull run. Everybody who hasn't yet invested or wants to increase their weightings, that will come in Jan. And generally, everyone with new shiny P&L, the hedge funds too, allocate. So I think that gives Jan, Feb and March much more potential. And it could go in as far as June before, there'll be excess speculation and the usual thing. It will kind of collapse under its own weight for a while, and regulation may be the thing that gets the market scared. But I think it extends further in price and time than people expect. So the more participants in the market, the broader and longer this plays out. So it's kind of a function of network adoption and the kind of Metcalfe's law idea. So it makes total sense that the price is less spiky, but the trends are longer. There's going to be something interesting as well, because institutions, again, the market's not used to this. They rebalance their portfolios. Now, if we're all right and we have this big final quarter run, December, at some point, there's going to be quite a big sell-off as everybody rebalances. Here's these two schools of thought. It tops in December or it tops later. And December is going to be a period where you're not going to know. And there's going to be a bunch of people freak out and say this is the end of the cycle. They might be right. Or it may, what I think was happen is then Jan, Feb, it just explodes higher again as all this new capital comes in. So it's going to be a really tricky period psychologically to deal with, because people are sitting on gains and people want to, buy some real life stuff. Even if you forget the Bitcoin halving, just use the nice log charts. It tends to get to 1 to 2 standard deviations overbought, spends a couple of years correcting, comes back. I mean, Amazon looks the same as that. Facebook, Apple, it's just normal. Yeah, I want to show you 2 charts. This talk about price and this. I've been using this for over a year, and it's been pure magic. This is Bitcoin versus the 2012-2013 cycle, and it gives us, a pretty clear target. And it's been magic. I mean, it gave me the strength through the bear market to keep adding, thinking we know how this plays out. And I'm going to also show you the Ethereum version of this. And so here's Ethereum versus Bitcoin in 2017. It's been pretty damn good. In fact, I've got this as a real-time chart on my Bloomberg, and it almost works to the day right now. It's so close. And that gives us upside to about 20,000. I also use log channels and stuff to give us other stuff. But what's really interesting is stuff like getting into the alt stuff is Solana is exactly following Ethereum 2017. It basically is 2 standard deviations oversold versus the historical trend. That's the total crypto market cap. So it looks like if you follow the trend and all of these exponential assets do the same thing, they get overbought, top of the trend. My guess is this goes from 2 trillion to 8 to 10 trillion at the end of this cycle, and then we correct. So that's the one chart, and then I'm going to show you the Solana chart as well. So here's Solana. This is the weird thing about all of these, and what led me to realize that everything is network effects, because the Bitcoin price now, the Ethereum price now is pretty much exactly in line with the Bitcoin price in 2017. And here's Solana at the same price as Ethereum, same price, growing faster as a network, but the chart is identical again. It's crazy. We're seeing this all over the place. My view is that if you look at all the size of all the other major asset classes, equities, bonds, real estate, they're all between 150 trillion and 300 trillion. Global derivative market's 1 quadrillion. So the total market cap is 2 trillion. This is a full asset. It's the fastest adoption of any technology in all recorded history. I think it goes to 200 trillion over 10 years. I've explained that just using the network adoption, looking at the other assets, this is 100x for an asset class.
Yeah,
right?
Exactly.
Just to be clear, we have never in human history been given an entire asset class, not one thing, an entire class that goes up 100x. So it's hard to say that would not be your overweight. There's going to be points where you actually want to own equities, and I'm a big believer in this exponential age technology investing, and I think that is a nice portfolio. But then if you're going to take that much risk, because that's a lot of risk in all of that stuff, it's why. How do you do that? Is you need to have an income.
Yeah.
You need to be pretty secure in your house. If you paid off a significant part of your mortgage, if you made some crypto profits, get rid of your debts. X, and I can afford to take the risk because I've got an income and I've got assets. I'm 100%. But it won't be that, because the reality is I will try and allocate. I'm a 30-year hedge fund guy. I can't help but try and do a bit of allocation occasionally. I'm 25% old. I'm comfortable. I know the adoption model. The adoption is clear. Solana adoption is earlier. We don't know how sustainable it will be over the time. So I'll take a smaller position. That's risk management. So what you need to do is look for the risk reward.